Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Thursday, July the 12th, 2012. Well, a continuation of the trend to the downside today and a candle with a lower high and a lower low. Previous day's trading we had a spinning top type candle that did suggest that there was potential for a change of trend to the upside. Spinning tops are indecisive, and we had downside price rejection from the 122.87 level that is now going to be an important level of resistance for this market. We saw the market sell off and find support down around the 121.55 level that I've highlighted previously as an important level for this market, and we saw buying coming in around that level. We have a black bodied candle, so the market has closed down today, which means that the sellers are keen. They're keener than they were on the previous day, because the distance of the close today from the previous close's distance for this is greater than the distance for the same for the day previous to today. So that determines the keenness in the market. But the sellers failed to close with control. They closed around the midpoint level, suggesting that they lost commitment down at this 121.55 level. The sellers did, however, make net bearish progress, and that's highlighted by the black body on this candle. Now, in terms of the Fibonacci extension, and we're examining this current first time frame downtrend the market's in, and we're looking at the relationship of that to the previous time the market was trending down, and the market has approached the 161.8% level, which coincides with this 121.41 level. And so we are seeing rejection from there. So this does suggest that this level is important and there is potential for a change of trend, but we don't have any indication yet other than the sellers losing commitment around there. We have a black body candle, and the buyers still have failed to take control of this market. In terms of the Fibonacci retracement, however, and now we're in an expansion phase, we've traded past the 100% level. Yesterday the market hesitated around the 161.8% level, spinning top candle, price rejection from that 161.8%, and did set the market up for that change of trend, but we've seen the sellers come in again and close down below the 122.30. So that in itself does not suggest that we are ready for a change of trend. There is potential for the market to trade down to the 261.8%, so let's see whether this trend continues down. So it makes the low at 121.66 quite important. In terms of Ichimoku, obviously this market is bearish in all three time frames. We're trading below the cloud, below the Kijun-sen and the Tenkan-sen, and the Chikou span is below the corresponding price action, so it's confirming this negativity that we're seeing in the market. And here, if you recall, we had the market rally up into this zone of resistance that I highlighted, and once again a very strong sell-off, and every time the market's rallied to there we've seen a fairly strong sell-off, and this is the strongest that we've seen in the sell-offs from that zone. Now this market is looking a little overextended at the moment, and that's judged by the distance that we are trading away from the Ichimoku indicators, and markets tend to act like rubber bands, and it wouldn't surprise to see the market want to bounce back towards the equilibrium that's offered by these indicators in the various time frames. So if we do see some bullish activity coming in, then there is potential for the market to attempt to retrace this first time frame downtrend. We do have solid resistance above those, so this 122.87 and the 123.28 levels are very, very important if we are going to see the market test up towards the Tenkan-sen, which is trading 123.96. The 121.55 level is very crucial to this market over the next few days. If we see bearish activity below there, there isn't any major support until the market trades down to 118.76. So that may be significant if we see the market trade down below there, and if we have a bearish close down below the 121.55 level. But obviously moving forward, let's watch the high of the current candle for a potential test of 122.87, but certainly the 121.55 level is much more important in terms of whether this market will continue to be bearish, or whether we'll see the buyers attempt to come back into this market, take control, and retrace this strong downtrend the market's been in for the previous couple of weeks.